Monday, July 10th, 2017, Monaco 64, home of alternative economics and contrarian views. So it's around 8:30 a.m. London time, and I'm going to talk about the gold-silver ratio and the precious metals. The markets continue to go down in gold and silver. So, some of you might say, why do you keep falling gold and silver, precious metals? They're finished. I don't think so. I guess for leverage players, it's a bad time. The paper players, if you're bullish gold and silver. But longer term, I still believe in the precious metals. I know cryptocurrencies have done well. But I just want to talk about what it might mean, what the gold-silver ratio is doing right now. Basically, the gold-silver ratio is just how many ounces of silver you need to buy 1 ounce of gold. So you take the price of gold in ounces divided by the price of silver. And right now, as I speak here, that ratio is just below 80. It's around 79.3. And historically, what that means, and this is according to an article back in 2014 by Adrian Ash of the Bullion Vault. And I quote the article. It says, what the gold-silver ratio says about deflation. Gold-silver ratio rises when money gets tight, and it's rising right now. Well, this was in March 2004. And it says, the ratio measures the relative strength of gold and silver. It simply divides the current gold price by the current silver price. So the gold-silver ratio shows how many ounces of silver you could swap for 1 ounce of gold. And I'll read a little further here. It says, but look at what the ratio suggests about the broader macro background. Because the ratio tends to fall, meaning that silver is gaining relative value when strong monetary inflation is boosting the feel-good factor of the rich developed world, mostly the US. So, and he goes on to say here, let's have a look. But from a 30-year low hit on April 28, 2011, when 1 ounce of gold equated to fewer than 32 ounces of silver, the gold-silver ratio has risen. So has the real rate of interest of U.S. bonds, despite the promise of whatever it takes to save the euro's currency union. So has the gnawing threat of Japanese-style deflation in the Eurozone. And starting in the spring of 2013, so has something like monetary restraint at the US Fed, with QE tapering finally starting in December. So basically, this guy is saying that it could be a sign that monetary policy is too tight. And looking here also at the gold-silver ratio in the last 10 years, the last time we traded above 80 was just around 2008, when we had the great financial crisis. You could call that a great deflation of the asset markets. So right now, we're just near that level. I think in February 2016, we did go above 80 and then it dropped. So am I saying that silver is going to rally here? No. The ratio could move back down by gold starting to move, more quickly than silver down. So it's difficult to say, but I would say that looking at the US dollar, as per the dollar index right now, the US dollar is down 6% year to date, and gold right now is down is up 5.14%. So yeah, these are interesting times. Silver year to date is down, let's have a look, 3.27%. So silver not making sense here. I think it is a sign that the monetary policy is very tight. It could, many of you say it's just manipulation of silver. Could be as well. But, if there was an arbitrage to be made, if it was manipulation, we wouldn't be at these points where, silver is down over 3% a year and gold is up over 5% a year versus the dollar. So right now, as I speak, gold is 1206.50. The low today has been 1204.78. The high's been 1214, which is that I spoke about in my last video about the midpoint of the double top being 1214. So that's going to be key resistance in gold. Silver is 15.25, down 34 cents or down 2%. The low has been 15.17. I guess we're still above the flash crash low of 14.32 on my system. I think the COMEX low was 14.34, but that's a future. Mine is the spot price. What else? Nothing really else happening this morning in terms of the stock market. The Dow is up 20 points. S&P is up 3.5 points. The currencies are really steady, actually. The dollar index is up 0.02%. The other thing I wanted to talk about is Japan, because it seems right now what's keeping gold and silver kind of down, even though gold is up on the year. Even though the dollar is going down, quite a bit, what's keeping gold and silver down, I think, is the Japanese yen. And last week, I think it was on Friday, the Bank of Japan intervened because the JGB 10-year Japanese government bond 10-year yield got above 0.1%, not 1%, but 0.1% or 10 basis points. And they intervened massively and drove it down to like 0.08.5. So, and why do they do that? Well, because they're having a tough time keeping Japanese government bond yields down, because everywhere else, in Europe and in the US, yields are starting to go up, and they've been going up since July last year. The same thing in Japan, they've been going up since July. They were negative 10-year JGB yields. And why is the Bank of Japan so worried about that? Well, because the rising yield in Japan would drive their currency, the Japanese yen, higher. And the Bank of Japan has this. They've had this crazy policy, in the last 10, 15 years, that they need to debauch or devalue their currency, keep yields low or near zero to get the economy going again, and it never works. And they just keep doing the same thing. And Kuroda, the Bank of Japan governor or president, he just seems to have no other, plans. And I saw an article that there's a mentor of Abe, like economics professor, saying that Kuroda needs to be replaced. He's kind of lost it. And the other interesting thing I read is that the Bank of Japan has bought so much JGB, so much government bond paper, that the supply is starting to run out. They've gone through so much of it. They own almost 100% of GDP in Japanese government bonds, and the annual issuance is becoming scarce for them. And what that might do is that they might not be able to intervene anymore in the market, and that could actually have the opposite effect that they want to have, to keep yields low. And I think that's important for gold and silver, because gold is kind of tied at the hip right now to the Japanese yen. Every time the yen goes down or the dollar goes up, gold goes down. So if we see Japanese government bond yields starting to spike higher, that actually could be positive for gold, because that's going to drive the dollar lower against the yen. Right now, dollar yen is at 114.26. That's up 1/3%, or up 36 pips. Last night, I watched the market a little bit. The dollar, the yen, dollar got down to 113.82, so the yen was quite strong. So right now, it looks like, the yen still weak, and the dollar, the yen still weak, and the dollar still strong against the yen, dollar yen. So yeah, let's keep an eye on the gold-silver ratio. That's at very, very important level of just below 80. Or if not at 80, I think we might have gotten to 80 today, but I think it's just below. It's 79.30 was the last time I checked, when gold was 1205.50 and silver was around 1520. So yeah, 79.30. What can I say to people, precious metals, believers, people who have bought precious metals in the past and are still holding it? Well, I'm still holding it, so, and I still believe in it, and I know it feels lonely, and it feels like everything that happens in the market, no matter what, gold and silver never go up. It does feel like that, but maybe that's just that's just before things turn around. We'll see. So if you enjoyed this video, please give me a thumbs up, share it far and wide, subscribe to my channel if you haven't yet, and you can also follow me on steemit.com, steemit.com, which is a social media platform based on the blockchain. I'll talk to you later. Bye.